All right, there we go. Okay, let's see if you guys can hear me. Oops. I just want to make sure you guys can hear me and see me okay before we get rocking and rolling. Awesome. Thanks so much, Merlin. I appreciate that. All right, so I'm just going to wait for a couple seconds for people to switch over because I know there were a bunch on the other stream before we go ahead and get rocking and rolling. So thanks so much, Merlin. I really appreciate that. So, you know, with what is going on, it's been a crazy ride the past couple of weeks, and really, you know, we've got a lot of stuff going on in the market. Hello, Ghost NG. Hello, Merlin. Okay, awesome. So everybody is slowly transferring over, filtering over. So that is a good thing. I just wanted to hide these yellow lines really quickly, and we'll turn off the pivot points. So we can go ahead and start getting into the market. First of all, for anyone that's been affected, I'm so sorry. My kids are home from school, so I know it's going to be a crazy couple of weeks for me. They're home for at least 2 weeks. And already feeling a bit of cabin fever with them. They're napping now, so if they wake up, you might hear some rustling at the doors, everything like that. So we shall see. We'll go ahead and get into everything for the week. If you guys have questions, go ahead and put them in the chat. It's up there for me. So if you see me looking up there, I'm looking at the chat to answer your questions. And, you know, with what's going on, try to be safe, try to really boost your immune system. I'm a big advocate of onions and garlic for fighting viruses naturally. And I know last week I said I was going to the CMT symposium. Well, I think I nixed that. I don't want to be on the wrong side of the border, away from my family, if they were to shut down the borders. So for now, I am foregoing the CMT symposium, which I'm really sad about. I really wanted to go, but right now I don't think it's realistic for my family to leave them. And I'm still studying. I am studying for the CMT level 1, which the exam is going on in June. And for anyone that's new to watching me, thanks so much for joining me today. And please like and subscribe so you can get all of the notifications when I log on, and definitely check out, I'm going to do another video about the 2 times in my life that I've been laid off. And so for anyone that might be going through that scenario, I can definitely commiserate with you for sure. So let's go ahead and get into the watch list for the week. I used to have my Series 7 20 years ago, which is the license by the SEC to handle other people's money. And I left and went to culinary school in Europe, and then came back to it after immigrating up here to Canada. So as always, please do your own due diligence in trading. You know, these are my opinions for any and every stock that I talk about today. There are trading risks with varying degrees of risk with all trading instruments. And know that any past performance is not indicative of future performance. All right, disclaimers out of the way. Let's get rocking and rolling. So we have the SPY, right? Craziness. We had this consolidation. Can you guys see that right there? This consolidation block right here. Then we broke below it. Boom, we came down. And you can see there's this white trend line right here. I will show you why that trend line is so important as well. So it looks like we hit it on Thursday and then came down, touched it on Friday, and bounced back up. Now, when we start backing this out, you can see on the weekly chart, obviously we went below the 200 simple moving average. On the weekly chart, it's right here. We came down, we touched below it, again, hit this white trend line, and then we bounced back up. However, we do have this purple trend line right here. I know it's really hard to see with all these lines on there, but we do have the purple trend line that is acting as resistance right now, as well as this moving average right here, which we When we broke down in December of 2018, we came down, we broke below it for a day, and then we bounced back up. So similar reaction, but we did hold on the 200 simple moving average. So here we have that test, higher than normal volume right here. Granted, we've had in these 3 weeks, really in 4 weeks, we went from the high of the market down 100 points almost. We came down to 247 from 339. So what is that, 96 points that we came down, 98 points? 88 points that we came down, and then we bounced up. So are we going to hold this week? But here's something in the bigger picture, right? When you start to think about it, China had a 2-week shutdown of the market, right? And let's go back. Let's see if I can do something cool. Switch the scenes. If it works. Awesome. So China had a 2-week shutdown of the market, where this so happened that it coincided with the Chinese New Year, and it was the virus. So they're starting to tell people to work from home as much as possible, keep that social distancing to slow the rate of spreading. Now, what's going to happen when they start to have people on the trading floor and in the SEC that develop the virus? They're going to send them home, right? Well, then who is going to be running the markets? Who's going to be running the computers? Who's that person behind the computer to make everything happen? They will likely, in my opinion, again, this is my opinion, have to shut down the US markets for roughly 2 weeks. So if you do trade options, be aware of that. You need to be ready to get out potentially if they do go ahead and halt the markets for 2 weeks. Because if you're in an out of the money trade, or even in the money, and it goes against you when they open, sayonara, right? All those profits are going to be gone. All of that capital that you put into it potentially gone. So if they start to say, wait a second, we've got to pull people off the floor, we want people working from home, well, the market's one area, and all of the major banks, the floor traders, everything like that, they have to have physical people, right? So it makes you think, who is going to be running the markets, right? If they have to send everybody home, they likely will have to shut it down for 2 weeks. And I can't remember if China shut down for 2 weeks or for 3 weeks, and what happened right at the end of the shutdown. Did it gap back up, or what happened? I'm going to look into that. But for the most part, if people are having to be sent home, there's a good likelihood that we might see a market halt for 2 weeks, in my opinion. Now, it's going to ripple down, right? What happens? Somebody's going to work. Guess what? Payroll has to be done many times by a person. So if that person is not at their desk to do their HR payroll portion, then those paychecks aren't going to go out. For the people that live paycheck to paycheck, this could be, catastrophic for them. And for the people that aren't getting their paychecks, that need to go ahead and potentially pay loans, car loans, mortgages, school loans, and they're not able to pay it, say the end of the month or the beginning of the month, then you're going to start to see people defaulting on loans, credit cards, any sort of credit. That the US is already very overextended. So that could be quite bad. And also, people might not realize it, but if they're not getting more money into their account now, where are they going to get the cash to go ahead and go out and buy the food if there's nobody working to send out the HR payroll checks? So just a thought, just be prepared. Maybe have a little cash on hand if you have the ability to do that, and be prepared for potentially the market to shut down for 2 weeks, because it might happen. We'll see what happens this week as well with the German DAX and the FTSE in London. Maybe they're going to turn around and say, hey, we want to go ahead and halt it. Japan at this time is still having their market be open, but their wave isn't as bad as Europe right at the moment. So just some thoughts. Well, Ryan, but still there's some companies where it's just humans that put in they're the final say, where they make the call. They go ahead and they approve it. So we'll see. It's just interesting. I'm very thankful to work from home and very thankful to be my own boss. So just thoughts about that, you know, just be prepared. That's it. You know what, Bat Scientist, I will look for you and I will put it out on Twitter what the top firms in the UK are. I know I have a friend over at Redbox Global that is a, they deal with the news over there. It's a news source. So if you wanted to message Redbox Global, tell them Airplane Jane sent you. They might be able to give you the best brokers because I know they're in the brokerage world over there. Also, Trade the Fifth, Paul, let's look it up. Paul Bratby, I think is his last name. Trade the Fifth. There we go. Trade the Fifth. Also, if you were to message here, they could probably tell you as well because he is over in the UK. So those are two people right off the bat that I know are in the UK that you could ask for their personal opinions on it. All right, let's go back to charts. So cool. I'm really cool. I'm glad I figured that out. Okay, so getting into the SPY. So where is this white line that I'm drawing coming from? When we go back on the monthly chart, right? I know you guys, all these orange lines are the alerts, and I don't know how to change the colors on those. But right here, when we go back and we go back to 2009, right? 2009 to the most recent spike after that, October of 2011. If we draw a trend line from the bottom of those two, then you can see that, hey, we bounced once, twice, 3 times, and this is the 4th time that we have bounced off of this trend line right here. I'll make it yellow and thicker so you guys can see it. Yellow. I will make it a dashed line. I will make it a bit thicker. Okay, so you can see all the way back from 2009, then again in 2016, it bounced off of there. We almost hit it, almost hit it in December of 2018, but we didn't. We did come down and test the 200 simple moving average on the monthly chart and bounced up. Now, we could go and test this again. That's the 246 area, right? And we have the 200 simple moving average. Let's see if I slide this up here, it'll tell me at 259.55. So those are going to be areas to watch, and it's really hard to see actually with all these lines here. But if you go back and you look on the monthly chart, we are butting up against a resistance right here as well on these, on the candlesticks on the monthly. A little bit easier to see on the weekly. If we pull it back out, you can see here it tested here 293, excuse me, we're at 270. So back here, right, you can see the hash line. So it tested it back here, tested it back here, tested it back here, tested it here, and then finally came down 275.64 was support that it launched off of June of 2019. So if we stay below this area, we're also right at this moving average and this purple trend line. This box is the consolidation box that we had over the daily period right here. So we might come up and test this 274.13 area where we consolidated for 3 days. Now, when you start to see the consolidation boxes like that, many times that can be the big guys and they're laying a position. So maybe those big guys are buying right here and they dropped it down to see, hey, maybe I'm going to buy some more and see how low I can get it before I can really buy more. And then they take it up, or maybe they were selling here and maybe they brought it down and up, they're going to bounce it up, and then they're going to sell into the mindset that this market is rebounding, kind of like what they did here, right? They took it down, they bounced it up, oh, they sold off and brought it back down. Maybe they're bouncing it up again for a dead cat bounce again and sell it down. So there's two sides of the argument that it could continue up if it breaks up above here. You can see I've got that SPY crossing up 288.04, high of consolidation box. So that was this consolidation box, the high of it. Or maybe it comes up here, it tests at 274.38, and it goes to the downside. But these 3 days, if you add these 3 days up of volume, definitely higher than these 2 volume spikes back here. And when we back it out for 5 years, actually we need to go back further. So when we start to look at the volume spikes, right, the biggest volume spike was way back here in September of 2008. We're not quite there yet on that massive volume. That was the big recession and correction, right? So when we look at it, if we look at the volume here, it's still, we've had some big days in 2018 right there, but other than that, it's been somewhat average volume. It looks like it's higher for the past couple of days, but if you look back at the crash of 2008, right, 7-8, it was much higher volume at the top up here, and then it came down. So we're still with the small volume, smaller volume, more volume than we've seen the rest of the year, right? Maybe the big guys are finally stepping in and they're like, all right, awesome, we're going to seize this opportunity. And then we're going to go from there. So let's go and look at NASDAQ as well. So NASDAQ, we came down, we tested the 20 simple moving average on the monthly. We haven't even come down to the 50 simple moving average yet, or the 200. I'm sorry, that was the, I kept saying the 200 simple moving average here. This is the 50 simple moving average on the SPY. So for NASDAQ, we might have a move down to test that, down at the 156 range, 157 area. When we look back at 2019, yes, it came back here. So it might come back and bounce and go from there. I didn't draw the trend line. Let's draw that trend line really quickly right here. We'll go to the bottom down there. So if it were to go all the way back down to that trend line that it tested in 2015, if we were to pull back that much, we might see it go all the way down to 130, right? 132 area. Let's check out the Russell. I don't have Dow Jones on here. So Russell, you can see, came down and tested that trend line. We did break below that 50. We broke below 90, 120, 100, 120, 161, and potentially down to that 95, which is the 200 simple moving average. Let's look at the Dow Jones. So Dow Jones, we're right at that 50 simple moving average on the monthly, right? So let's draw that trend line down here again. Go from the bottom. And again, look at that. It closed right on that trend line. We dropped below it a bit on the 2015, bounced and came back up, almost touched their 2018, same thing, and now we're testing it. So if we break that, we might be going down 200, 179, maybe worst case scenario 150 on the Dow Jones. All right. So let's go ahead and get into potential longs for the week. So Walmart, where is everybody going, right? Where is everybody going to go ahead and get stocked up? Walmart and Costco, right? The craziness that's happening. It's like Black Friday all over again. So we've got our horizontal line. I go ahead, oops, I don't want it right there. I want it down here. I'm going to go ahead and put it at 111.96. And then to the upside, I like back over here. You can see this acted as resistance, 115. So when we're looking at it on the year, I'm just going to put those numbers over here, 111.96 and 115, right? So let's hide this, settings, show that, no. All right, so we're also testing the 200 simple moving average at 115.30 and 115.72. So if we're able to break above that 200 simple moving average, we might go ahead and go to the upside, you know, a nice target of 120 after we test 115, and then so on, 120, 158, and then that big test up here, 125 area. Next potential long, CVS. Oh, hold on. I didn't put that lower level right. 111.96. I forgot the extra 1. All right, so CVS, let's go ahead and just draw these down here. So CVS, obviously, where's everybody going to go and get vaccines if these vaccines come available, right? Are they going to make them go to their doctor? We can see right here we have this support a resistance that flipped to be support, right? So resistance, resistance, boom, breaks it, new resistance, and that acted as support. We could put a tighter support right here at 59 because it just went right between 59 and 59.70. So we might see that that's going to continue on up. Of course, these could be trades to the other direction. Now, we are testing the moving averages from the bottom. You can see back here it bounced up, came all the way up here. Roughly, if we want to use this same moving average, we could say potential test of 64. If that breaks up to the 200 at 64.65, and then 66.84, right? And 59.84. So let's look at SM. Now the oil sector massacred this week, right? But look at this. We have higher than normal volume, and it actually closed above this candle right here with higher than normal volume. This has a nice gap fill to the upside of 370, and it's slowly, you can see that moving averages are slowly curving up. So this might have a potential move up to the bottom of this candle, 377, and we're at 233. So let's go into our 15-minute chart there, right? And you can see it spiked up and then sold off right at close. So initial right there, it's probably because some shorts got squeezed at the end of the day. And then maybe first target up here, if it breaks above 209 to 234 as that test. And for support, I'm putting support down here at 190, right? So you can see I'm more interested in this setup right down here, right? We've got this high volume candle, we are closing above it, and we have this gap to the upside. So this could have a nice move to it on Monday. Might already gap up pre-market, but that's my thoughts on SM. I totally skipped Azul. I didn't put on my list. Now we're on the right, so let's put on Azul. All right. So Azul, same reason why I like this. It didn't close above this, but we had earnings, right? And we have a fairly bullish move right here, but it didn't close above the top of this candlestick with a high of 1658. Oh, there we go. Let's pull these down. All right. So it was 1658, right? So post-market actually went higher, and you can see we've got this right here. This acted as resistance. I want to see that hold as support, this area, right? It kept testing it, dropped a little bit below, came up, tested it, dropped below, right back up. So I want to see 1495 to hold as support and 1667 for resistance. Right, and then potential move right here to 18, might test that average 17 mark, then on up to 18 after that. Any coronavirus, Bat Science is asking, are you in any coronavirus related stocks long-term like Myrna and Novavax, Gilead, and Codex? At the present time, I am not, because those are more momentum trades. So no, I am not. I am trading some of the downward moving stocks and then waiting, holding more cash to go into longer term positions on the long side. But right now, no, I'm not trading those momentums. I would rather trade the ones that have the big volume that are moving down. The low floats that could go up really quickly could also drop really quickly. If one of those were to come out with the virus and you're not in that one, those ones that have been running up could very quickly drop and you could lose a lot. So no, I'm not. If I were trading those, I would go the lower risk of an option where it's going to be a minimal risk of just that investment, right? But I wouldn't bet the house on any of all that stuff. All right, let's go into Oracle now. Right, so Oracle, let's pull these down, had earnings, big gap up fill right here. right? So it pulled back, gapped up, and we're starting to curl up. So let's look at our 15-minute chart, right? So end of day, it came up to 48. So would want to see it really break 48. And on the downside, want to see the support hold of 45.69 for Oracle, or 45.70 even say. All right, so when we pull it back out, you can see massacre day on the market. They had earnings and then boom, came back up right away. And now it's testing. You can see this was our former support once, tested it twice, and then boom, broke down, came up, just closed above it, came back down. So now it's flipped and it's resistance, and we could see it break to the upside. You know, first test maybe up here, 49.27, and then 50 right here, $50 mark. All right, so let's go into Carnival. Ouch, right? I don't know if any of you guys had cruises set up, but I hope you had insurance if you did. The whole transportation sector right now for leisure travel is getting really massacred. Potentially, you think about it, a lot of people go to Vegas for bachelor parties, bachelorette parties. They might not be doing that now. So that the whole casino area might be getting hit as well, because that's a large area where people congregate all together. Who knows if Trump will say, no, let's go ahead and close them down. So we do have massive volume here that came up. And if we close below this, if we close below with this massive volume, we'll likely be going further down to the downside. Sorry. Excuse me. So 15.35 and 19. If we go ahead and we close the upside, we have a bit of a gap up here to 20.50. So we can have a nice $1.50 move to the upside if it goes to the upside, and that's buying instead. Let's also look at American. So American has somewhat been consolidating right here. They had a bit of consolidation right here on these 4 days, came below, and now we're sort of back up in that box again. So if we look at it, they are the biggest airline around the world, and closing down domestic travel would probably really hurt them. I know a lot of people are canceling. And so 13.81 to the downside and 14.34 to the upside for American Airlines. But you can see when we drop down here, there's been massive, massive volume, but it hasn't moved that much. So when you have massive volume, but really your price isn't moving that much. I mean, if you look at all the volume here compared to the rest of the year, potentially some big hedge funds might be buying into this longer term, right? They might be bottom fishing and saying, hey, this is a good buying opportunity for American Airlines here. So we shall see. It hit a low of 13.12. We might see a bit more to the downside. You know, in my opinion, I think 10 might be that round number that a lot of people would want to get into. But right now, this is pretty much, you can see 14.23. It went below my targets of where I said maybe 12.64. When we look back on it, maybe that's going to be. But look at the volume. This is the highest volume that it's had since 2005, right? Right back here, it was comparable. No, yeah, right about the same amount. So we shall see. Nike. If they close casinos, I won't be able to play blackjack when I have come to love them. I'm sorry about that, Bat Scientist. I know you love your blackjack, but they might close them. You got to think realistically, right? If they're sending everybody home, they don't want people to congregate together. What are they going to do? What will they close down? Movie theaters, performances, theme parks, airports, concerts, sporting events, right? Just thinking of it realistically, what would they close down? Or strongly suggest that people do not go there. I'm sure you've done really well and you could probably take 2 weeks off, right? Okay, so Nike. Nike just announced they're closing all of their US stores and in other countries as well. Massive volume came into it. on a nice discount down from 105, obviously. But we could see the averages come down and catch up to this. So 74.84 and 76.43. All right, and others. Next we have Starbucks. Now, nobody, again, where would everybody want to go and hang out if they can't hang out at the movie theaters everywhere else? Maybe a Starbucks, right? Well, that might not be so cool. Look at how it just stopped up here at 70, right? It pretty much just stopped right here, all after hours. And put our support down here at 69. Let's look back. So you can see 70 acted as support for a really long time, and look at how 69 did too. It was resistance, then it became support, boom, off. Now we're down below again. So is this going to hold as resistance, 70, or is it going to flip and be that support again, right? So we'll keep it on watch to see, but a lot of these bigger name stocks, big volume here, maybe that was buying. You don't know. It did close up above, and so we will see. Again, we're starting to see lots and lots of volume that's going to give us an indication maybe people are buying, but maybe they're also liquidating further. We'll see if it's a bounce or if it is a sell-off. All right, last one to the potential downside, Disney. Again, Disney is closing, and we can see a pretty strong resistance right there, and we'll put a support right back up here, 185 and 102.57. Oops, 57. Right? When we look at it, they're coming down, they're on a discount, right? From way back here in 2018, December of 2018. It's a big name in the indexes as well. We might see it go down further to 98. It did go down to 91.64, but we might see it hold down here and test 97.85 as resistance. You can see down here, 96, wow. Came all the way back down to lows potentially of 2016. So we'll see. Disney's biggest moneymaker is probably the parks. I don't know for sure. I don't know the value fundamentals on that aspect of it. But I can say we have higher than normal volume, looks a bit bullish here, but this could be also, you can see how there's a little box of consolidation, right? Let me move it up. Oh. Go back here. And then we'll draw it. You can see right here, my eye just sees this, right? So we've got this box of consolidation, top with 112, low of 101, close just into that box, right? Just inside of this box. So are we going to see this box act as our resistance? Was this all buying volume here, or was this all selling volume? The 3 days where they just sort of held it and consolidated this week is telling as to whether those were buying days or selling days later. We don't know for sure. Right now we're below it, right? And then bigger volume came in, could go up above. So let's put an alert right here, crossing up. And I actually want to see what's the high of this candle here. High of that candle is 111.58. So we'll put 112. If it's crossing up over 112, likely that was all buying, right? All right, and potential longs. You can see I have 3 potential long swings over here. So potentially looking at my IRA 401k, you know, CVX massacred, right? Down 50% almost. 121, excuse me, down 30%. So 121 down the 80 range, nice discount potential, dividend stock as well. You know, if it were to cross up above 88.45, potentially, like Trump is pumping in all this money into the oil industry by buying for all the reserves. Smart, right? He's buying on the reserves. And so that could drive the price up a bit more. Let's see, what's their average dividend? 129. So depending on how many you got, 129, it was at 120. So you're looking at roughly 1% dividends. There's some other good dividend stocks. If you wanted to check them out, you could check them out for sure. Also, BOKF. So looking at this one, big gap fill here. Add alert for crossing up, right? This one is also lower float. And it could have a nice big move to the upside. I don't know it for fundamental values. Let's see, dividends on this one, 51 cents. So could have that move to the upside, had bigger volume here, but again, would want to wait to see it close above here for that move on up. You could have a nice $10 move to the upside when it breaks 53.11. Also Oxy. So there are two in the oil sector right here. And I'll put an alert if it crosses up 16 here. But this one might have a move to it as well. I mean, look at all that crazy volume that's coming into it. Yes, there were people that were trying to get out, but it seems like it's stabilized and maybe it's coming back to the upside, you know, and when it breaks, actually, I want to see it break 17. I want to see it break 17. Let's look at it on the 15-minute chart. I want it to break this high right here, 1850. That's what I want to see, 1835, right there. I want to see it break that before it goes to the upside. All right, any banks on watch? You know what? There is just this one that I was looking at on watch, but we could look at Bank of America. Why am I? Why am I spacing? I was spacing on the ticker, sorry on that. So Bank of America, we might have this nice gap fill up to 25. Then if we go ahead, you know, we've had this consolidation again down here. We did actually close above this consolidation box, so it could be fairly bullish there. Arky. Anybody else have any other questions or stocks or things you want to chat about with the coronavirus going on? Oh, I hear my little one calling. So keep watch. If you think you're fearful of getting laid off, definitely check out my video coming up. If you like my content, please like and subscribe. I hear my little one calling, so I'm going to call it a wrap for today. Have a great week ahead. Be nimble. Be prepared to protect yourself in case the market closes for 2 weeks. Have a good one. Bye.